Good afternoon. Time to wrap up September the 10th, 2014. Tomorrow will be our 13th anniversary of September 11th, 2001, when the Twin Towers were attacked. So keep your fingers crossed that nothing bad happens tomorrow to welcome us back to that world. We came in this morning wanting to sell the 93-95 area off the bat. Didn't get close to it. The market started giving us lower highs, and right here is a beautiful retest failure. Now we're getting lower highs and or a retest of such. We had our first buy in the 85 area. Before the day session opened, it gave us a good trade. It was positive. But right here off the opening, we get a retest failure set up. So you're short in the 88 area plus or minus, and the market eventually trades down to 81. One wave, two waves, three waves down. Now you should start thinking about being a buyer. And we talked about this in the room. Look for a head and shoulders. And when you take out that bars high right there in the head and the shoulders, you're long. We do pause the market in the 90 area plus or minus. We talked about all these breakouts and the retests of such, and eventually we make it up to 95, and we're holding here. So we had a good day of trading. Our preferred buy zone was 80 to 82. You can see the market got into that pretty handily. We got our setup right here that allowed us to go short, playing for that. And we actually got a good trade off the 85 level. So good day of trading in the E-mini so far. Looking at the F1 screen, our whole premise of the trade today was a trading range wouldn't be able to break the market. We'd identified this possible C area right here, this low as support, and you can see we got to it right there, and it held. So in a bracketed trading range, we talked about it this morning, that everything looks really, really bleak, bad. We're on the lows. We look like we're going lower, but the market doesn't break. It comes back into it. So why does the market come back up into this trading range? And the reason is that price activity has taken us down here, but nothing has really changed. The economy's giving us mixed information. Sometimes the numbers come out stronger than forecast. Sometimes they come out lower than forecast. So we've got mixed information. And until the numbers consistently come out better than forecast or worse than forecast, we're probably in a trading range. Bad news rallies the market. Why? Because the Fed has to continue to support the market. Good news breaks the market. If it's not market-changing news, because the Fed may not have to support the market. So we're in a very, very strong P. The bias is still to the upside, and you got more time to deal with a long trade than you do with a short. So this screen's going to yield a P. We can sell failure to extend the range because of the lower high and the lower low, but if we don't break support down here, we definitely want to trade from the long side. Looking at the F2 screen, now, I did an E split because I took out the value area high. You can see F and G hold. So when we go above a value area high, even in the short term, you're trying to buy against that value area high. That was resistance. You can see in C period, now it's support. We have a double distribution. We are headed up. Right now, we don't want to get short until we retest this high and it holds. Kind of in the middle of a trading range. It doesn't really offer us much advantage at all, being long or short in this 95, 96 area. So being short, there's a definite advantage above 2000, definitely above 2003. So 2003 and higher, and then being long, we've got getting long below 85 is where we are. So 20-point range, 85 takes us up to 2005. So structurally, this 2005 area is where we're looking to get short again in a big way. So selling failure to take out 90 597, assume that we close right here, is the trade one, and then our 2,000 area plus or minus will be sell 2. The news is pretty limited tomorrow. Jobless claims 200,000 is expected at the default 300,000. And then natural gas inventories, probably north of 82 billion. So I'll have the number in the morning, but the build's been 82, 83 here of late. And my guess is they'll probably put as much into storage as they can with the cold weather moving through the United States right now. On the buy side, we have this breakout at 92, 93. Last rotate down was 90, so 90, 92 will be buy 1. And then our 85, 87 will be buy 2. You know, Charles, my guess is he's not going to say anything that really changes. I think where he'll get lambasted if, you know, we armed ISIS and trained them how to fight early on. They were moderate rebels against Assad. So, I mean, who does he go out and train now? If the boots on the ground are going to be moderate rebels that have, I mean, that's not a professional army, and what makes you think that they could take out ISIS? In fact, in a lot of ways, they're fighting for the same thing. So if you're not going to put a lot of boots on the ground with professional armies and the rest of it, quote unquote, it's a manageable situation. And I don't think that'll cut it. But because the fighting and the war is over there, I don't think it greatly will affect our markets. If he says he's going to go in there with full force and put a lot of troops on the ground and go wipe out ISIS, I think we'll have some euphoria associated with that, because it would be, if you truly wanted to get rid of them, that would be the course of action that you'd have to take. So I think that would be supportive, and would help the indexes and maybe hurt the financials a little bit, so you don't have that fear of ISIS taking over the world. So if he comes in and just kind of maintains the status quo, my guess is we're still in the trading range. Okay, we're getting no lift out of the 30-year today, and this market is pointed down, so I want to be a buyer tomorrow because of the 30-year auction, but if it weren't for the 30-year auction, I'd be looking for a place to get short. So we got all this volume in this 12 to 20 area, and that's where we're staying right now. So this high volume number pulled the market to it. And here we sit. So if the news doesn't change, I think after this week, next week, the market will continue to sell. And we're going to test this area down here, 23.12 to 24. I think that's where we're headed. War, escalating war anywhere in the world would be supportive. Peace forthcoming would be a negative. So this one looks like it's headed lower to me. And a lot of like the 30-year just got no lift at all today, none. And the act to the upside was in the note, if you can believe that. So we're kind of where we were this morning. We want to sell the 20 to 24 area, 19 to 23, and 27 to 31. Probably a little more interested on the buy side. I'm going to keep our 13 to 9 because of the 30-year is buy 1, and then 1 to 5 is buy 2. Jobless claims is the only news week tomorrow, plus the 30-year auction. If the E-mini is selling with a lot of momentum, I definitely do not want to be short. Okay, looking at the 30-year, and you'll see the total lack of range we had today. Just nothing. And that's pretty unusual. So we had knob spread liquidation. We lost, came in at 13, we went out at 22. So we lost about 10, 30 seconds worth of spread. This is the first time in a long time the knob spread has not worked, and it still might work tomorrow. So the 12, 16 to 20 area should be reasonable support. And we're still waiting for our $500 trade. And this is the first time the knob spread on a auction has not worked. So something's afoot. I don't know what it is, but something is afoot. So buy zone down here, we're going to make it 1 to 5, going to lean against the buck. If this thing is selling, they can't move the 30-year paper. And then 25 to 29 for buy 2. Going to sell failure to take out 12 to 16. And 19 to 23 for sell 2. Not a lot going on. Favor the buy side in the financials just because of the 30-year auction tomorrow. No other reason. Otherwise, I'd be looking for a place to sell it. Okay, gold, we've got a trading target of the 1235, 1238. We've been talking about it for at least a week. I think we're headed down. This morning, our number 2 buy zone was 45, so that's support. It's going to be buy 1. I do like the sell side better. And buy 2 is going to be 38 to 40. On the sell side, we had hoped to sell 55s to 57s. So top of the trading range is this 1258, 1260. So 1253, 55 will be sell 1. That's just where resistance is. And sell 2 is going to be 58 to 60. If Obama tonight says he's going to go over there and clean house, gold will probably sell a little faster. If Obama hems and haws, we're going to be lower, but probably not in one great big fast move. Okay, longer term, we're making new lows. Haven't been there in a year in crude. I think crude is headed for stops below 90. If Obama were to make a big commitment to get in there and clean out ISIS, I think it would be bearish for crude. If he's going to maintain the status quo and do what he's doing right now, we're headed lower, but probably not all that fast. So we've got stops below 40. So this market may have rejected prices. So we're going to make it's a B pattern. If we can't get through the single print up here, I think we got a chance to test support. So we're going to put it a little lower, 91, 91.25, where support is right now. And remember how to make a letter B. And then 25 to 50 for buy 2. On the sell side, we want to sell 92 plus or minus. And in the 8 period highs 54, 25 to 50. And again, escalation in the fighting, outright fighting can take us higher. Quickly. I think Europe's response to the Russian sanctions has been pretty quiet. Now they got to go back to the drawing table and see what round of sanctions come next. You can't let them have the final say in all this, can you? And whoever doesn't increase their sanctions on the other has blinked. They've cried uncle. Okay, definitely a seller above 29.50. We're at 13. Last rotate up stopped at 23, then stopped at 15. So this 20 to 30 area is going to be sell 1. And 40 to 50 is going to be sell 2. On the buy side, our 80 to 90 looks pretty good. Then 50 to 60. And the how is Europe going to respond to Russia's sanctions? That's what the market will be asking themselves overnight, and they'll come up with their best guesses. Hey, that's all for September the 10th, 2014. We'll see you bright and early in the AM. My guess is Obama's speech is not going to change a hell of a lot. We'll see, though. Be nice if he would get in there and get after this and solve this problem, but I don't think that's in the cards. Mañana it will